It's been quite a remarkable week as far as oil markets are concerned. The volatility, of course, predates the last week or so. Given the amount of volatility we're generally seeing across the global financial market as a result of the fears surrounding the coronavirus. But the last week in particular has been particularly eventful. We had the OPEC meeting towards the back end of last week, and while there was some disagreement between Saudi Arabia and Russia in regards to whether there should be an increase in a production cut and just how much that should be, I think the general consensus view was that we would eventually get a deal of some sort, or that Saudi Arabia may decide with its other OPEC allies to go it alone. And instead we saw a complete breakdown here. Russia did not want to consider any further cuts whatsoever, let alone the 1.5 million cuts that was being touted by Saudi Arabia. And instead we have seen a full-blown price war being waged by both sides. Saudi Arabia deciding to offer massive discounts on its oil and ramp up production by nearly 3 million barrels a day. Russia likewise has decided to ramp up production to its maximum levels as well, further engaging within this price war. And now we are looking at a situation where not only are we seeing a dramatic reduction in demand for oil as a result of the economic fears surrounding the coronavirus and the slowdown which is taking place, we're also now seeing massive oversupplies as well being committed to by all of the major players. We saw Brent crude and WTI crude on Monday morning at the open plunge by around 30%. And while we have seen a bit of a bounce back since then, we are continuing to see it trade right around these lower levels, the lowest levels that we've seen in around 4 years, and neither side is showing signs of letting up here. It seems that everyone has their own objectives, whether it's Saudi Arabia potentially trying to bully Russia back to the table with these lower prices, whether it's Russia trying to put pressure on the US shale system, refusing to come back to the table because it's effectively tired of losing market share, or whatever else it is that's driving these moves. It doesn't look like this is going away in the very short term, so we can continue to expect to see a lot of volatility in the oil market, but also to expect to see them to continue to trade around these lower levels, testing those levels of 4 years ago. As far as the WTI crude is concerned, the two levels that really stand out for me here right now are still 30 and 35. We've got to remember we've seen a lot of volatility at this moment in time, but 30 and 35 seems to be the levels that are being respected, broadly speaking. We did come back to around $27 in the immediate aftermath at the start of this week, in the immediate aftermath of Saudi Arabia and Russia announcing that they are going to dramatically increase production. But we did then see a bounce back yesterday just above the $35 level. I think we hit around $36, $37. Once things start to settle down, I think 35 to through 30 could become a key level here. If we do break below 30 though, then we are looking back a couple of years back towards those kind of $27, $28 levels, which could potentially offer some support. But broadly speaking, again, a lot of things are going to depend on numerous factors, which makes this all the more difficult. It is going to depend on just how much Saudi Arabia and Russia manage to ramp up production, how well US shale industry copes with these much lower prices. We've got to remember this is an extremely indebted industry, so if this continues for the next few months, then things could get really interesting as far as US shale oil is concerned. Then, of course, there is the global economy and what type of data we start to see materialise from this. If growth is much slower than we're otherwise anticipating, then this could be a major drag on oil prices even further than what we've already seen. And of course, we've got things like the inventory numbers, which provide some near-term perspective as well. So there's going to be a lot to watch here. So volatility is likely to continue, even if not to the same levels of the last week. And as long as the coronavirus continues to spark fears around the global economy, then that's just going to further feed into this.